When will the bull cycle end? Will we get the Bitcoin strategic reserve passed in the US? Will we see other altcoins explode with new ETF approvals? Here are my 7 most important predictions for crypto in 2025. There are a ton of important events to watch out for in this next year. You need to be paying attention to this video. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Before we get into the 2025 predictions, let's quickly look at my crypto predictions for 2024 and which things I got right, which ones I got wrong. The things I got right this year are, first of all, Bitcoin hitting 80K. This is a really good milestone. Second, the US elections is a make or break event for crypto, and luckily Trump came into office and crypto is exploding. Number 3, the ETH ETF did get approved this year. However, Ethereum didn't reach my price target of $7,500 in 2024, but I do think this is just lagging behind for now. There were also no other altcoin ETFs that were approved in 2024, although this will change in my belief in 2025. Crypto gaming did go semi-mainstream this year as well, with Off the Grid gathering decent amounts of traditional gaming traction. However, we're not there yet. And AI crypto continued to grow with a focus on ZKML. Now, ZKML today has a new word that's really associated with it that you guys might have heard of, which is T. T stands for Trusted Execution Environments, which is one of the backbones that actually powers the current AI agents narrative. So a lot of these agents are verifiably decentralized because they are encapsulated in a central processor that cannot be manipulated from the outside. So all of their transactions with their wallets and their interactions on Twitter are all within their own ecosystem that's closed up. This is used to be called ZKML. So I'm actually pretty surprised I was able to make this call as well. But nonetheless, I did not see this explosion going in the AI agents narrative so quickly. Then moving on to the things I got wrong for 2024. The first one is that layer 2s did not make a comeback. And in fact, I don't think layer 2s will make a comeback this cycle. Mostly they are just beta plays to Ethereum, and you might as well just hold Ethereum in your portfolio. Second major prediction that I got wrong, decentralized social media was really not a popular narrative this cycle, and I don't have any exposure in this narrative anymore. There also really wasn't a new DeFi primitive that came out this year with explosive growth, although I think that's starting to show some signs in the form of fair launch altcoins, and in a sense, the pump fund meme coins, the ways of launching new tokens on chain in a DeFi-centric way. This is similar to what I was hoping for, but it's not so DeFi heavy anymore. Instead, it's just a way of fairly launching tokens. And the last thing I got wrong, Binance is still the #1 exchange by far. They did not lose their spot. Now let's get into my predictions, and I have 7 of them today. The first prediction is that I believe we will have a longer bull cycle and a slower cycle than most people expect. When will the crypto bull run end? I believe we have at least another 5 months to go until May of 2025. In fact, I believe the bull run won't end until Q4 of 2025. Even though we may see a correction in the summer months, however, prices should be higher by the end of the year than the first half of 2025. If you guys have been following the channel, you know that I have been preparing my full investing plan way back since 2023, and I have already covered why I believe Bitcoin will extend into 2025 and formed my exit strategy with that basis. As we are starting the year 2025, we are starting to see the Fed and the liquidity cycle being delayed significantly as well. I have covered this analysis extensively. You can check out my previous videos, such as this one talking about the Bitcoin cycle myth, this one talking about the rate cuts and the recession and their effects on crypto, as well as this one coming from the Fed liquidity injection and money printing. The TLDR here is that the US Fed kept delaying the money printer, even though they have given the early signs that they will stop reducing the size of their balance sheet and start increasing it again. Back in May of 2024, they still haven't made the full pivot. You can actively track these at each FOMC meetings, and up until December 18th, their stance was still that they were not going to turn on the money printer just yet. Now we know this is going to happen quite soon, so I am closely watching the next 2 FOMC meetings on January 28th to 29th and on March 18th. The rate cut cycles are also slowing down, which is very good for a longer and healthier bull market instead of a very quick one and done pump. Contrary to popular belief, when you have very aggressive and very fast rate cuts, this means something is terribly wrong with the economy and we have a recession on our hands. So markets have one last hurrah and it drops completely. However, since we have slower and slower rate cuts with people pricing in no cuts in the January meeting and about a 50-50 chance for a 25 basis points cut, this gives us a much longer potential for a bull market. The recession is also clearly delayed until at least 2026. You can actively search up US recession probability, and since this summer when these probability were as high as 57%, when people were seeing very aggressive rate cuts, now we have only 33% estimates for a recession to happen over 2025. When it comes to altcoins, however, I believe the crypto native traders are misreading this cycle. The current cycle is driven heavily by Wall Street institutions, the Fed liquidity, and inflation's result. It is not driven by the memes, the AI cryptos, crypto Twitter, or on-chain traders. The macro events have not even happened yet. We don't have the money printer being turned on yet. And crypto traders on CT are already calling the tops. This is way too early in my opinion. Just look at Bitcoin dominance. We haven't seen anything close to the 2021 cycle with Bitcoin to altcoins rotation or the 2017 cycle with the similar caliber. Practically all the growth in Bitcoin this year has been driven by the spot ETFs, which have picked up more than 5% of all of Bitcoin's supply. I say this not only because of the size, but also because of their correlation. Take a look at the Bitcoin spot ETF inflows and outflows compared to the price of Bitcoin. You see, whenever the inflows are green, Bitcoin price rallies, and then in the months that Bitcoin ETFs has outflow and are net negative, the days even are negative on Bitcoin's chart. You see here, positive when it's green, negative when the ETFs are selling, positive when it's buying, negative when it's selling. You can track this very closely on chain, as every day these ETFs have to have filings showing you exactly how much they have bought. This same effect has barely started for any other altcoins. Just look at Ethereum. The only positive inflows coming into Ethereum only started on November 5th when Trump came into office. We'll talk about this in a bit. All this tells me that the crypto native traders still have PTSD from the bear market, and they see a little bit of profits from their altcoin holdings, and they think the 4-year cycle is just near the top already. I am in the other camp. I believe we will see close to another year of bull market. My second prediction for 2025 is that there will be massive liquidity injection from all fronts coming from the US. The basis of this is very simple. Everyone knows US has a very heavy debt crisis that will only worsen as there is no solution. The only way that they can get themselves out of this is to inject massive liquidity using the money printer. I have covered this concept very in depth in my video here of why the money printing will trigger the crypto bull run. TLDR here is that the US Fed, the Federal Reserve, the central bank, will need to support the US government from defaulting and protect treasury bonds. Now, there are a few ways that they can do this. Number one, they can directly print money by printing US dollar from the central bank and turn on QE, which is the Federal Reserve balance sheet pivot that we were talking about earlier. When that happens, it will be announced at one of the FOMC meetings, and subsequently we will see the US Federal Reserve net asset balance sheet start to increase. That's this chart that you can track transparently on TradingView. When this happens, it essentially means the central bank is printing money, they're buying up mortgage-backed securities and treasury bonds, and all that liquidity will flow into other risk-on assets. There are a couple other methods that the US government can use to devalue the price of dollar and thus create more liquidity for themselves. One interesting way that Trump and his new Secretary of Treasury, Scott Bessent, could employ is by devaluing the dollar against the Treasury's gold holdings. I highly recommend you to read this piece called Trump Truth that's written by Arthur Hayes. In this piece, he covers how the US Treasury can actually devalue the price of dollar by increasing the statutory price of gold in their treasury in order to create a bigger credit line for themselves. If you didn't know, there is actually a statutory price of gold which is set by law in the US. This is only pricing gold at $42 per ounce, which is stayed the same since 1973. Compared to the real market price of gold, today is over $2,000 per ounce. This is actually very interesting, and it's a tool that the US Fed can use in order to create more credit line and essentially choose to devalue the price of dollar at any time they want in a global landscape against other currencies. And ultimately, a devaluation of dollar in this sense means that the US Fed and the US government create a new credit line denominated in dollar for themselves. Essentially, it's just like liquidity injection. Another method that the banks can use is to suspend something called the supplementary leverage ratio. TLDR here is that by suspending the SLR requirement, this allows banks in the US to buy up more treasury bonds with higher leverage in order to support the government. I'm sure there are more creative ways at the government level to be made in order to inject more liquidity in 2025 to support the US debt, treasury bonds, and in turn, all of this liquidity will flow into risk-on assets. The result of any of these or all of them together is very clear. They will all lead to inflation. If you turn on the money printer directly and start to buy assets at the Federal Reserve level, that leads to inflation. If you devalue the price of the dollar against the treasury holdings of gold, that leads to inflation as there are suddenly more dollar in the system. If you suspend the SLR ratio, the banks can buy more and more bonds, and in turn that leads to inflation. Inflation leads to asset prices soaring, which is ultimately a good thing for crypto. My number 3 prediction is that I don't think we will see a US Bitcoin reserve to be passed in 2025. Remember, politicians always overpromise and underdeliver. In order for a serious bill like the Bitcoin Act of 2024, the Bitcoin Reserve Bill, to be passed, it takes multiple years, especially for one of these crypto-related bills. But do not fret, because there are 2 steps to this initiative which are both very good. Number 1, the first half of this bill says that the Department of Treasury must purchase 1 million Bitcoins over a 5-year period and hold the Bitcoins in trust for the US. This takes a lot of conviction and eats into other spendings which need to be passed. It's very hard to convince US taxpayers to be buying up the bags of crypto holders. However, the second part of this is much easier. All Bitcoins acquired under this bill must be held for at least 20 years unless used to retire outstanding federal debt. The US is already the largest nation holder of Bitcoin, holding more than 1% of the supply at 213,000 Bitcoins. At today's price, that's worth more than $20 billion. That's not a small amount. Technically, the US already has a Bitcoin reserve. They just can't call it that yet. When you compare this holding against how much gold that the US holds, the US currently holds over 8.1 thousand tons of gold, and that's just under 4% of all of gold's supply that's ever mined. So the US currently owns over 1% of Bitcoin's total supply and just under 4% of all of gold's supply. This ratio of conviction seems fair to me. I don't think the US will try to issue more debt to buy crypto and convince their taxpayers. It's much easier for the US to ride the wave of crypto adoption from the institutions, from these ETFs, and just simply draw against their USD credit line by using their BTC holdings, over $20 billion worth at today's prices, when they need. Number 4 prediction for 2025 that I have is we should see the first pro-crypto bill being passed from the US. But this will benefit altcoins much more than Bitcoin. Let's start from the top here. The SEC is getting a new chair, Paul Atkins, who is pro-crypto, and he is going to come in right after Trump comes into office on January 20th. With this new head could come a new dawn for crypto, especially for regulations that concern the SEC. The one crypto bill with real impact surrounding altcoins is called the Fit for 21st Century Act, which I have covered many times on the channel. This bill establishes a regulatory framework for digital assets, especially altcoins. Under this bill, the CFTC must regulate a digital asset as a commodity if the blockchain or digital ledger of which it runs on is functional and sufficiently decentralized. It also gives a clear classification of what decentralized means, which is that no person has unilateral authority to control the blockchain or its usage, and no issuer or affiliated person has control of 20% or more of the digital asset or voting power. If any of the digital assets are not sufficiently decentralized, then they fall under the regulation of the SEC. Under the new administration and the new SEC chair, I believe this bill could finally get passed in 2025. And the specific effects will be that, number 1, US crypto companies will flourish, especially the ones that are sufficiently decentralized, the layer 1 blockchains with a very diversified set of validator sets, holder accounts, and holder bases with multiple years of distribution. These these will flourish because they are sufficiently decentralized and they will go under the CFTC, essentially not being treated as securities. On the other hand, the smaller crypto startups that are just starting may face more problems to get into the commodity standing. In this case, they may have to file with the SEC to be treated like securities early on if they want exposure to the US market, which could hurt these new crypto startups. Ultimately, I believe there will be a divide to form between the large, very established cryptos that are not deemed as securities, and then there are the on-chain degen-driven DeFi crypto startups that cannot be offered to centralized exchanges in the US, but they also cannot be filed with the SEC because they're still too small. Many crypto investors hope that it's going to be the Wild West, and if Trump comes into office and we have a new SEC chair, all of a sudden all cryptos are not securities. This is not the case. We have a clear bill that is going to be passed, which outlines what you need to do in order to be decentralized and considered a security or not a security. In this case, having a clear regulation means we won't have random lawsuits anymore, but it doesn't mean that every single crypto will be freely tradable on every single centralized exchange. After the Trump admin is confirmed with the new head at the SEC, chances are much higher for altcoin ETFs to be approved in 2025. I'm not going to give you random lists. Instead, I like to follow the two leading experts coming from Bloomberg on crypto ETFs, Eric Balchunas and James Seyfarth. According to the analysts, the most likely ETFs to arrive next are Litecoin, HBAR, Solana, and XRP in that order. I just want to say, do not fade the analysts, Eric and James. They are the experts in crypto ETFs. Not only did they predict the Bitcoin and Ethereum ETFs, but they also got the exact date windows to the approvals and the launch dates. Eric says that we probably have Litecoin ETFs since it is a fork of Bitcoin, so it is a commodity clearly. And then we have HBAR because somehow it's not labeled as a security. And then XRP and Solana, which have been labeled as securities before, but are in pending lawsuits that will be resolved. What do all of these altcoins have in common? They are all officially recognized as not a security from the SEC. Now, Litecoin, sure, it's a fork of Bitcoin, but what about HBAR? This was very interesting to me, and I looked into it. Apparently, since 2019, on HBAR's website, they have already stated that they have confirmed with the US SEC after countless, deep legal discussion and scrutiny, and the SEC has concluded that Hedera's native currency HBAR is a utility coin and not a security. Now, I can only find this source on Twitter today. I can't find the original post, but I believe this is somewhere on the internet that leads the Bloomberg analysts to make these conclusions for putting HBAR next right after Litecoin, even before XRP and Solana. So why not XRP and Solana right away? I believe this is mainly because XRP and Solana were both under recent disputes with the SEC since 2022 and 2023. However, we do know both of these cases will be resolved, so the XRP lawsuit is just near its settlement, and apparently the final results will come out sometime even in January this year. And the Solana case is also very clear. Solana is heavily decentralized today. You cannot argue for that anymore, that Solana is centralized. Remember, we had this previous filing with the SEC going after Coinbase, which listed a set of crypto assets as potentially securities. On that list, the first one is Sol, but very soon we are expecting this lawsuit to be dropped once the new SEC chair comes in. So the timeline could match up for the lawsuits to be dropped and the SEC actually officially coming out saying that XRP and Solana are not securities, and then you go through the filings, you go through the approvals, and then you go through the launch sometime in 2025. Now you might say, does this even matter? Some people say that since Ethereum's ETFs has been very underwhelming in price performance since launch, what about other ETFs? Does this even matter? My response so far is that you are right, but partly because the Ethereum price is simply lagging behind. Going back to our spot ETF analysis for inflows and outflows, you see that the Bitcoin ETFs has had positive inflows since day one, and every time this happened, it contributed to positive price growth, and when the ETFs were negative, the price dropped. However, when you look at the spot Ethereum ETF, there has not been positive inflows since launch from July 22nd. In fact, the only time that the inflow actually ticked positive was right here by November 6th and 7th. After that point, you saw very clearly that the price of Ethereum started following the trajectory of inflows and outflows of the US spot Ethereum ETF. So a big part of the effects on price from altcoin ETFs in 2025 will depend on how Ethereum performs over the next year. Let's say if Ethereum's ETF does not have positive inflow over 2025, then we shouldn't assume other ETFs will have any inflows at all, because the institutions always go from the top to the bottom. They will have to go into Ethereum ETFs in order to be interested in smaller altcoin ETFs. However, from current look, it does seem likely that the Ethereum spot ETF will continue to increase in inflow and pump its price, because we have seen that firsthand since November 6th. From November 6th until today, there has been a total net inflow of about $5 billion coming into the Ethereum ETFs in the US. This accounts for around 1.3% of Ethereum's total market cap already. And this is in just 2 months. If we keep this same trajectory up over the next 12 months, that means we could have over 8% of more holdings of Ethereum's total market cap as taken up by the US spot ETFs. Let's talk about this a little bit deeper with my 6th prediction for 2025. I believe Ethereum will outperform Bitcoin in 2025, and it should do so by a large margin. I think around 2x outperformance. First of all, we already see the effects of the ETH ETFs coming into play. Because Ethereum is a smaller asset than Bitcoin, the effects of inflow coming from the ETFs is actually greater contribution to the price performance. Going back to the same ETF analysis chart, we see that since November 5th, when the total net inflow has ticked positive, we have had $5 billion of inflow coming into Ethereum's market cap, which currently contributes to around 1.3% of market cap. So about 0.65% of the total market cap per month. Now look at that of Bitcoins. So since Bitcoin ETFs have launched in July of 2024, over a 5-month period, the total net inflow is just about $55 billion. So about 2.8% of the market cap over a 5-month period, which translates to 0.56% of supply that's going into the spot ETFs per month. So you have the US institutions typically buying on average 0.55% of Bitcoin's total supply per month, whereas on the Ethereum side, they're buying 0.65% of the supply over the past 2 months per month. So the institutions have been buying more Ethereum than Bitcoin on average since November. If this trend continues, at some point, the percentage holding of total Ethereum supply in the spot ETFs will overtake the percentage holding of all Bitcoin in the Bitcoin spot ETFs. This will be a major shift from institutions. Second major point that's super important for Ethereum is its seasonality. You often hear of people saying, sell in May and go away. Now, this effect is somewhat relevant in terms of Bitcoin and the overall market, but on Ethereum, it's exceptionally accurate. So on TradingView, you have this direct indicator called seasonality that you can just find on built-in indicators here. When you look at the seasonality of Bitcoin, it's kind of all over the place depending on if you're in a bull market or bear market year. However, when you look at the seasonality of Ethereum, you see that the first 6 months of the year is much more bullish than the second 6 months of the year. So first half of the year is really when you want to hold Ethereum. You see, on average, from January to June, the performance of Ethereum is all positive since 2015. And not only this, but when you look at Ethereum versus Bitcoin's ratio chart, you can also chart the seasonality right here. And you see from January until June, in this 6-month period, Ethereum on average outperforms Bitcoin by a lot. Compared to the second half of the year, usually Ethereum underperforms over Bitcoin. So statistically speaking, right now is much better of a chance to be positioned in Ethereum versus Bitcoin, at least until the summer. Even if you are bearish on Ethereum and you just want to hold more Bitcoin, you're better off holding Ethereum until the summer and then convert your Ethereum back into Bitcoin sometime in May to June. And lastly, let me give you my price predictions for Bitcoin and Ethereum by the end of the year. I still have the exact same target that I have established over 2 years ago, which is that Bitcoin should reach $200,000 by end of year, which is about a 2x growth from current price of around 100K. For Ethereum, my target is for it to reach around $14,000 by the end of the year. This number is about a 4x growth from $3,500. My assumption here is very simple. As we have the Fed liquidity cycle come in, with the altcoin season starting, with the Trump administration and the new SEC chair being bullish for DeFi, for Ethereum staking, and Ethereum ETF inflows finally ticking up, we should see the ETH BTC ratio chart start to tick up in bull market fashion again. When that happens, I believe the maximum potential over this cycle is for Ethereum to do about a 2x return on top of Bitcoin. You can see that very clearly here from around the current price doing about a 2x. That would still be below the 2021 bull run peak levels. So we don't have to assume that it can ever get back to as high of those multiples anymore. But even if we have diminishing returns, a 2x on top of Bitcoin is not too far-fetched from here. So if this analysis is correct, that means Ethereum BTC goes up 2x, which means if Bitcoin goes up 2x, you take 2 times 2, that gives the ETH USD price chart going 4x from here. So from $3,500 doing a 4x is $14,000 by the end of the year. I would rather stay more bullish on Ethereum at the current point than be underexposed. So is this very likely to happen over the next 12 months? I don't know. It's actually quite a big number to target, but better to stay bullish in ETH right now than staying bearish and still believing in the concept that ETH will just lag behind and not do anything for this cycle. I think having that bias right now is going to hurt you very dramatically because there's so much happening on ETH over this year. Okay, that wraps it up for my 7th most important predictions for 2025 coming to the crypto market. Have I missed anything significant? Is there something that I need to look into? Let me know down in the comments and maybe I'll do a follow-up sometime in the second half of the year. If you like this content, make sure to follow me on Twitter at VirtualBacon0x. This is where I drop quick alpha before I make them into these in-depth videos. And if you're looking for a trading community, check out the Coiners with the link in my bio. This is where we have trade alerts, live streams, Q&As, ask questions, talk with other investors to check your bias, etc. So if you're looking for a community, we have over 2,500 VIP members already. It's free. You just have to sign up with one of our partner exchanges and we earn fees that way. That's it for this video. Thank you for watching and I will see you on the next one.